I am Steve Schwartz, Managing Director, JLL Seattle, Washington. With the release of our 2015 Law Firm Perspective, we have identified some interesting overarching themes at both the regional, national, and local market level. Nationally, AmLaw 100 revenue reached a record $81 billion in 2014, showing a consistent growth rate of about 4.5% per year. Nearly 16% of these firms have profits per partner greater than $2.5 million. That being said, fee compression, as well as weaker demand for legal services following the recession, are forcing law firms to focus on enhanced efficiencies for two of their largest expenditures: talent and real estate. As it relates to real estate, law firms are facing a tighter and more competitive office market than in previous years. The Puget Sound office market continues to tighten. With declining vacancy, we're approaching the tipping point for substantial rent growth. Regionally, we've seen a 9% increase in rents over the past 12 months and are forecasting a 6% increase over the next year. And due to the lack of available creative space in our smaller tech submarkets, such as South Lake Union and Fremont, high-tech companies are increasingly migrating to the traditional law firm space in the CBD, driving competition for core Class A space. How can law firms leverage all the new developments we are seeing? Spec development is definitely on the rise. As more projects come out of the ground and near completion, there will be increasing opportunities for law firms to acquire premier space. In terms of specific strategies, assess long-term options well in advance of your lease expirations. And rather than focusing strictly on trophy top-tier core buildings, consider repositioned buildings. Developers are taking Class B properties and improving amenities, bringing them into Class A status. Further, think about maximizing the use of your space. Shrink your footprint as much as possible upon renewal or relocation. Nearing the peak of both the economic and real estate cycles over the next 12 months, we recommend that law firms over the shorter term should be assessing a variety of factors, from location to predicted footprint to talent and retention. JLL understands the changing workplace and real estate dynamics facing law firms. Together, let's roll up our sleeves to develop and implement a creative real estate strategy that addresses your firm's near-term and long-term goals.